Public storage stock, ticker symbol PSA. Is this the best dividend stock to buy right now? PSA stock is down almost 14% year to date versus the S&P 500 being down 18%. A thing that investors like about public storage and also about REITs in general are the dividends, of course. Later in this video I will dive in the dividends. First I'm going to show you what public storage does, a quick view at the historical stock price performance, the fundamental analysis, the dividends, and of course the major competitors. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does PSA do? Public Storage is the world's largest owner, operator and developer of self-storage facilities. They have nearly 2,500 facilities across the United States and serve more than 1 million customers. PSA stock is traded at the New York Stock Exchange for around $314. The company was founded in 1972 and has 5,600 employees. The company has more than 2,600 facilities with 1.6 million customers in 39 states. The reason why Public Storage is the market leader is because of the iconic brand, but also because of the unmatched scale. Public Storage has a number 1 position in 14 out of 15 top markets and has the best portfolio compared to the major competitors. More than 2 times the number of owned stores to the next competitor, and most A locations, and this is very important. I was using storage facilities a lot in the past couple of months because several family members moved and had to use these facilities. It's a big advantage when using a location instead of driving to a B or maybe even a C location. In this graph we see the amount of square feet added in millions to the portfolio. In the past 2 years, 10 years and even in 15 years, Public Storage is the leader. In this graph we see the growing demand for self-storage using since 1987, which is a long time ago. But it does comfort me a lot to see that more and more US people are using self-storage. In this graph we see different population by age and generation in the US. The core customer base is between 30 and 60 years old. The future core customer group is looking really good in terms of amount of people. So a lot of potential new customers for Public Storage. A thing that I really like about Public Storage is the fact that they deliver quality. It's an iconic brand that most people know, but it's also very important that they have an excellent service. In Google they have a 4.8 out of 5 stars review, and at Trustpilot they have a 4.7 out of 5 stars, which are both really high of course. But it's very important to keep delivering quality, so this is something that I really like a lot. Another thing that I really like is the fact that they have a 76% of their tenants staying for longer than 6 months, meaning a big chunk of their revenue income is secure. Public Storage already has the highest margin versus the competitors, but is also planned to increase the margins by 2% over the next 3 years. In this graph we see that Public Storage has more than enough room to grow the business. Right now they have a 9.4% market share, and since they are heavily increasing the market share with acquisitions, the market share will grow even more. A great way to increase revenue is to let your customers spend more on each order. Public Storage expect to have a 40% growth in the next 5 years for the storage insurance premiums, which is a great way to increase the average order value. When checking the Moody's SP credit rating, we see that Public Storage has the strongest REIT balance sheet with a A2/A credit rating. The last thing that I want to show are the engines of the long-term growth. Public Storage expects a 3% same-store sales growth and a 2.2 to 3.7% portfolio growth. All combined will be a FFO growth of 6.7 low to 9.2 high growth. With the dividend yield sitting at 3%, they expect to deliver a 9.7 low to 12.2 high annual return, which is slightly above the average of the S&P 500 ETF. And now that we know everything about the company Public Storage, it's time to check the historical stock price performance versus the S&P 500 and some major competitors. I decided to include extra space storage, ticker symbol EXR, live storage, ticker symbol LSI, and CubeSmart, ticker symbol CUBE. On the 5-year chart, we see that PSA and the S&P 500 almost did deliver the same return including dividends, around 75%. EXR and LSI both doubled in return versus PSA and the S&P 500. And CUBE did deliver also a nice return of 115%. On the 1-year chart, we see that PSA, EXR and LSI all did deliver a positive return of 6 to 8%. The S&P 500 is a minus 7% and CUBE also a minus of 4%. On the 6-month chart, we see a negative return for all stocks, but PSA is down only 12%, while the others are down 16 to 22%, which is quite the difference. Last graph is the 1-month chart, where we see that all stocks are down except for CubeSmart. PSA is down the most with 3%. So now that we know everything about the historical stock price performance, it's time to check if PSA is a buy based on the fundamentals. PSA is a 53 billion market cap company with an enterprise value of 63 billion. The PE ratio is sitting at 29. In this graph we see the gross margin, operating margin and net margin. All margins have decreased a bit in the past couple of years, but since late 2020 they are increasing again. Net margin is sitting at almost 50%, which is really high. In the investor presentation earlier in this video, we saw they wanted to increase the gross profit margin with 2%, which in the end also will increase the net margin, of course. Next up is the profitability of the company. All these numbers should be above 10%. Return on assets is sitting at 11%, which is fine by me. Return on equity is sitting at 22%, which is really high. And the second most important one, return on invested capital, is sitting at 15%. The most important one, the 5-year return on invested capital, is sitting at 11.4%. Both are really good, but you want to keep an eye on these numbers. They should stay above the minimum of 10%. PSA did 3.7 billion in revenue 12 trailing months and has a 26% quarterly revenue growth year over year. In this graph we see the revenue over the past years, and it's going up nice and steady, especially after 2020. Earlier in this video we saw that they have a 9.4% market share, and the industry itself is growing, so it means it's expected that the revenue will go up in the coming years. For me, it's very important that the EPS is also going up. Since REITs do issue a lot of shares, the EPS can be a bit complicated. In this graph we see that since 2010 the EPS is going up quite a lot. Back in the days it was quite steady, but since 2017 it's going up and down a lot. After 2020 it only has gone up. So that's a good thing. But keep an eye on the EPS, you don't want to have a flat line here. When we check the balance sheet we see that PSA has 914 million in cash. 2.7 billion in operating cash flow and leverage-free cash flow is at 1.85 billion. REITs have a higher debt in general, so I'm not that worried. And earlier in this video we see that they have a credit score of A2, which is quite good. So to be honest, I'm not worried at all with these numbers. But it's very important for me that free cash flow is growing, since this is used to pay down debt, buy back shares, do acquisitions, pay dividends, and of course research and development. In this graph we see that free cash flow is going up big time, and it's also quite nice and steady, so that comforts me a lot. Especially since this is not always the case with REITs. Another really important metric is the FFO. In here we see that it's growing since 2017, but it has gone up and down quite a bit. I prefer a bit more steady growth, but on the other hand, when this number goes up in the long term, I don't see any issues. What's very interesting about the stock is the fact that they don't issue a lot of new shares. Although this graph looks like a big increase, in the past 5 years they only increased the shares outstanding by 1%. And this 1% is very low for a REIT in general. So this is also something I really like about this company. The next thing I want to discuss are the dividends. And this is quite interesting. Right now PSA has a 2.5% dividend yield, which is pretty decent. The annual payout is at $8, or $2 per quarter per share. Payout ratio is sitting at 77% based on the free cash flow, But when we check the payout ratio breakdown, we see that the actual numbers are significantly lower, which comforts me a lot. The 5-year growth rate is nearly flat, and the consecutive years of increasing dividends is at 0%, which is quite disappointing to be honest. The last dividend increase goes back to late 2016, so I don't really like this part of the dividend. But on the other hand, with a 2.5% dividend yield and payout ratio being very healthy for a REIT, I do think the overall stats are okay. The last thing I want to show are the fundamentals of PSA versus the major competitors. Again, I decided to include extra space storage, ticker symbol EXR, live storage, ticker symbol LSI, and CubeSmart, ticker symbol CUBE. The first thing that catches the eye is that PSA has a significantly higher market cap versus the others. When checking the revenue growth, we see that LSI has the highest revenue growth year over year, and PSA has the lowest revenue compound annual growth rate, and also the lowest net income compound annual growth rate. But EPS is growing a whole lot better versus the competitors. The compound annual growth rate for the leverage-free cash flow is also quite low compared to the others. Right now, PSA does have one of the highest growth margins, and net income margin is also significantly higher. Return on equity, return on assets, and return on total capital are also significantly higher versus the competitors. PSA has a whole lot more cash versus the others compared to debt, so that's also looking really good. The last thing I want to check are the dividends. PSA does have the lowest dividend yield with 2.5% and also no dividend growth. All other companies do have a higher dividend yield and a dividend growth streak. To me, EXR does look the best here. So my final conclusion with this stock is that I think it's a very interesting company with a quality management and also a proven track record when it comes down to growing the business. Fundamentals look great and the credit score is also very nice. But I don't like the dividend scorecard that much. I think dividend yield and payout ratio are all good, but there's no growth in the dividends since late 2016 and that's quite disappointing. All things combined, I think PSA is a great stock to own and to collect the dividends. The industry is growing and they claim to be the market leader, but for now I think I'm just waiting a little bit longer to see what's going to happen with the industry and to analyze some major competitors. So remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.